Yo, welcome in everyone to a new video. It's been a while and I'm hoping that you're enjoying your summer vacation so far. And the reason I'm making this video, it's actually gonna be a part 2 of showcasing MarketMonkey Terminal because they had a huge update. They have a lot of features that unfortunately we won't be able to cover in this video because it would make the video huge, but we'll try to cover some of the stuff that we've found to be the most important and also simple to understand. Of course, there might be some hidden features that you can use to your advantage, so we highly recommend you to take a look on your own, but you can take this video as just a starting guide to make your transition easier from the old version to the new version if you were already a MarketMonkey user. If you were not, then it might actually be better for you because they changed a lot of stuff that some people were used to find in like different places, such as the button placements, the getting an indicator to show up on your chart. Some stuff are different. So let's just deep dive and also stay to the end of the video to find out how you can get this template. Now, without any further ado, let's take a quick tour into the new terminal. As you can see, the UI has changed slightly. Also, I think some of the graphics have changed, like not only the colors, but the way that numbers and data is presented to us, I think it has changed a little bit. The way that you can aggregate exchanges also seems to have changed significantly. So what we got in the top bar is, first of all, you get to choose your ticker, like usual. Then you get to choose your time frame, which I think they've also added this non-time option, but it's only for the ultra users, which we currently do not have. And you can see that with the ultra plan you can choose tick, volume, rates, rotations, trend reversals, some very nice candles that you can use if you want to trade more aggressively. We might make a tutorial on T-Rev candles in the future. And server aggregated render ready bars, which is something that I think I haven't seen before in another terminal, and I will actually be curious to find out later how this works. Then you get the chart type, pretty usual stuff. Not really, I don't really know if they changed anything here. They might have, but I just cannot remember. Then here you get your indicators, which is a different placement than what we were used to. And you can find the official indicators. I think they've added some new indicators, especially the hyperliquid ones, which show accurate data that you can use to your advantage. You also get your community indicators. This is the one that you will find on my chart too. If you already have MarketMonkey Terminal, you can get it by searching for it or just by clicking on community indicators. That's an indicator that has been quite useful for my strategy. You get your favorites and you get your personal. Unfortunately, the indicators that I've created haven't transitioned to the new terminal. I don't know if I need to do anything to get them to show up here, but either way, I actually stopped using them quite some time ago, so it's not gonna be a big issue for me. You get the indicator templates. Here you can save your templates. You can also save as default and reset to default. You get your draw tools. I think they've also added some new stuff here, some stuff that I never heard before, such as the polyline. I've got no clue what this actually is. Again, you get some stuff regarding your template. You also get the community template right here. You also get your workspace layout, the ability to add a widget. They've brought some new widgets such as the alerts and terminal and prediction events. The ability to show all widget tab bars. I prefer to have this closed. And your settings again, where you can also change a lot of stuff, and you also get the hotkeys, which can help you a lot in your workflow. That's something extremely important, at least to me. At the right side, you're gonna find a good surprise, which is trading. Trading is now available straight within MarketMonkey Terminal, and there are two options to trade with. You get the proper, which I think I haven't used any of them, by the way, but I think proper is basically a way to trade with prop firms on MarketMonkey Terminal, which I know that a lot of you are going to be very interested to do. And then you get the hyperliquid, which of course through API you can connect your hyperliquid wallet and just trade again straight from the terminal. Very, very welcomed update. You get your alerts here. As far as I know, they currently support only basic price alerts. You can do, of course, some stuff right here, but I think they're limited to this. I could be wrong though. If anyone knows about this, you can point it out in the comments. The ability to take the screenshot, of course, of your chart, your plan, and the date, as well as your city. So that's all I had to do with the tour. Now let's jump straight to the new terminal and our updated template. So like previously, for those of you who haven't seen the videos, the way that I'm trading, which is displayed by my template, is that I'm using two order books on the left side. Both are the same. They are both checking only spot markets, and I've aggregated Binance, Kraken, and Coinbase, because these to me are the markets with the most significant and also most useful type of data regarding the passive market participants. Now, why I have two order books, you might be wondering. The one, as you can see, has a PG of 50. I think this can be translated to tick as well, probably. It's basically showing me price changes within a $50 distance, and on the right I have it set to 250. Very simply, on the left I see the micro, and on the right I see the macro. As I've said in the previous video, when these two are having the same bias, when they are saying the same bias, for example, both of these appear to be bullish, with a lot of passive bids waiting to get filled and a lot of bids pressure, then I'm more confident into my bias and taking a long. Now, on the right side, and what is actually taking the most real estate of my terminal is, of course, the chart. It's a footprint chart, and if I can zoom, I can see the footprints within each candle. As an indicator, I have the order book depth resting below, which is one of the most useful stuff that I've added to my day trading, as well as the heat map loaded. Can't trade without heat map anymore. Also very useful, mostly to find targets and invalidations. Footprint standard, which refers to the chart type that I'm using, and since I can see the footprints, hence why it says footprint standard right here. Then I have the indicator that I've showed you previously, the order book pressure bands by Eman. The settings that I'm using for this one is, again, I'm checking only the spot wallet, and you can very quickly see my settings right here. Again, if you stay till the end to find out how to get this template, I think this indicator is gonna come with the already customized settings that I've placed. And lastly, I've got the volume bubbles, which show the volume. The settings that I'm using for this one are right here. And now going straight to the chart, let's start with a very simple strategy that you can all test out by yourself, and I think it's gonna enhance your trading a lot. So the rules that you can follow are: never look for shorts when this is bullish, never look for longs when this is bearish. Keep in mind that because this is checking, if I remember correctly, only spot, this should be more sensitive to bids than asks. When you see this appear to be very bullish, take it with a grain of salt, don't FOMO. And when you see this indicating bearishness, you can be maybe slightly more aggressive with the shorts. With that being said, let's look at some trade setups and why those trade setups are good. Let's start with the highs right here. As you can see, our little indicator right down here kinda predicted the high. It had a lot of false highs, of course, previously, and that's why you need to sometimes have multiple invalidations, multiple confirmations, but again, without adding a lot of more noise to your trading. We always trying to cut the noise. So why this high was good? Using the pressure bands, you can see that we had a golden ratio on the high right here. What a golden ratio means, basically with the settings that we are using, when you see the overlaid bands on the chart having these yellowish colors, with the settings that I'm using, this means golden ratio. Hence why I'm using the yellowish color. It's basically a way to showcase the gold ratio. So we had a high here with a golden bearish ratio, which means that the pressure from the ask was much more significant than the pressure from the bids. The indicator right here, the order book depth, which is checking a much macro view, since this is set to the range of 10%, if I remember correctly, was also giving us the green light to take a short. Taking a short on these highs would be a gamble, in my opinion, because you had no other confirmation. We had some volume bubbles popping up here and there, but here we had everything in alignment. You have the green light to look for shorts with the order book depth down here. You have the overlays printing a golden ratio. You have the change of structure, which is sometimes this tends to be a bit underrated, especially to order flow traders. We had the change of structure here. As you can see, we made a high, a low, a lower high, lower low, lower high, and it keeps going. And you had your passive orders to use as invalidation. If we change chart slightly, and honestly I'm not sure why it does this. I think it's because I've aggregated the heat map and it might be a bit sensitive to the changes. But if we play with the chart a little bit, you can see that there were some passive ask orders coming in chasing the price down. Let's ignore these two, although they were significant because they were statics. They are probably on even levels as expected, and as you can see right here, they were actually on even levels. But here, I think this gives a much greater picture. You can see this order that started chasing the price down after the lower high. You can see a new big order coming in on the high right here. You have the golden ratio from the bands, and you have the volume bubble printing right here, which not the best indicator in this case, but quite a decent trade to take. So using the new draw tools, we can actually draw the short position, and it should be looking something like this. You see your confirmation, you see the golden ratio, you see price not breaking the highs right here. You can use the previous high plus the big order as your invalidation, or if you want to be more aggressive, not something I recommend often, it would be to take the chasing limit order as your invalidation. It would give you higher RR on your trade, but sometimes this can actually get you stopped and then it's gonna plummet and then you're gonna get mad. And as your confirmation, I would wait for the order book depth to turn bullish, significantly bullish. This would be a very good place to take your first take profit. You can see huge trade to take. Second place to take profit, although nothing significant. I would probably prefer to ignore this and I would be trailing my stop loss to the highs right here. And here comes the place where you should be taking most of your profits for such a runner, because you had two significant volume bubbles popping up. You see this getting bullish. Of course, later it nuked even more, but in my humble opinion, this is something that it's very hard to chase. This is turning into a gamble, so I don't think this would actually be executable. Of course, you can leave a small runner, like 25% after this low, to just with a trailing stop loss. That would be the best play right here, but I think this is quite a nice and easy trade to take. Moving on here with the strategies that we are following, the order book depth, you will see that we had a great opportunity to take a long here. Now, if you were a bit more, if you were a bit less risky than I tend to be, I think this trade would be a decent winner, because you would be basically looking for something like this. You have your golden ratios popping up. You can take this level as your invalidation where the low is resting. Decent volume bubble, a lot of golden ratio printing on the screen, and you're looking to get out in these bands. But it's gonna be a bit hard to play for me, because first of all, this is very bullish. I think I would actually keep most of this trade. Maybe I would be looking to take some small profits right here, but I would most likely, if I were to trade this, I would be looking to keep this, leading to me getting stopped. Getting stopped in trading is nothing to be ashamed of. It's the normal part of doing this job. Then I wouldn't be looking to relong this low right here, because it would turn into a gamble for me. I don't know how much further this can go, especially since we came from a huge nuke. And the best long to actually play right here is this specific low. And why this is the best long? After getting stopped in this trade, which I likely would, the long that we are looking for is right here. So what we see here, we have the green light again to go long. We had the green light to go long all while the price is ranging here. This has turned into a bit of a gamble, because it broke the first golden ratios. It broke this golden ratio too. I wouldn't look to trade this. It also broke it, so I wouldn't look to take any longs anytime close, because this can very well just keep on nuking. But once we start turning bullish, you see price fighting support right here. You see some ratios popping up. You see price starting to respect those ratios, and you are also seeing pressure from the bids. You're not looking to take any shorts, or with this being boiling in bids pressure, and you get your volume bubble popping up on this low while having a golden ratio. This to me is a pretty clear trade to take. So what you would be looking for, oops, I think I opened the wrong thing, is to take I think I did the wrong thing again. It's to take the long right here. So you take the long once you see the bubble, you've seen the golden ratios right here. You see price starting to become bullish, making a low here, high, higher low, struggling a bit to find a higher high, might as well be ranging, but either way, it's actually not bad for us even if it rages. because we can also look to get out of this trade without breaking the high here. You are using this static order as your invalidation. There you go. And you're looking to get out once you see pressure bands. If you want to be a bit less risky, you are looking to get out on the highs right here or anywhere near the highs right here. This is a pretty decent setup that you can take. And just like that, using this strategy, we see 3 trades that we can take. One very nice short, depending on your style how to play this. One long that we would likely lose. 2, but it's alright, it's all part of the game, and another internal quick long that we can jump in to get some profits. Now what you need to do to get this template, as we promised at the start of the video, is to go to tradertoolmats.com, and once you take our diagnostic test, if Market Monkey Terminal comes up as your best mats, as your best result, you're gonna receive an email with a guide on how to get started with Market Monkey Terminal, as well as this template that you can utilize to your advantage, and you can play around with it, maybe to change the color scheme or find a different use case based on this. But in our humble opinion, this is a decent template to get started with. I hope you find this video useful. You will find all the links that you might need in the description or the comment section of the videos, and I will see you on the next one.